ahead and start the recording. We do have some people missing, but hopefully they'll trickle in as we get started. And I am just going to go ahead and make the slideshow bigger so you can all see it. And before we get started, I just want to start with my standard announcement is that if you do need CRC credits, they are available for your participation today. Just shoot me an email at Michael, M-I-C-H-A-E-L, .klinger, K-L-I-N-G-E-R, at dars.virginia.gov after the meeting. And if you need CRCs, I will make sure those get logged in for you. Also, this webinar and all the webinars in this series are going to be recorded and archived for you to listen to later if you want to, and also feel free to share them with your office staff. So today's webinar is webinar 3 of a 6-part series, and we're going to be talking a little bit about how Social Security counts income when somebody is on Social Security Disability Insurance, or SSDI, budgeting, and overpayments. And I thought overpayments would be a good topic to cover in the SSDI section, and I'll tell you a little bit more about why in a minute. But if you were with me last week, we talked a little bit about how Social Security counts income if somebody is on SSI and some of the resource exclusions and the income exclusions that there were. And as we go along, you'll see that the budgeting rules for people on SSDI are very different. So let me just, sorry. There's a little bit of a delay with my slides there. Okay, so the way that it works when somebody is on SSDI is in the following way. The only similarity with SSI is that, like SSI, Social Security does look at the gross income that a person on SSI receives when they work. So they're going to look at what the client is earning before any withholding for taxes or retirement accounts or any other deductions. They always look at the gross income. Where it differs, though, is that as somebody is on SSI and Social Security counts income in the month that a person receives it, for SSDI, it's a little bit different. The money only counts in the month that the person earns it. So unlike SSI, where extra paycheck in a month could impact their SSI check for that month, that's not a factor in an SSDI case because they only look at the income in the month the client earns it. It doesn't matter when it was received. So a month where a person might get an extra paycheck wouldn't matter. Here's the biggest difference. Last week we talked about some of the income exclusions for SSI recipients. Just as a refresher, they take the first $20 off unearned income, the first $65 off earned income, and then they divide that in half. With SSDI, it's very different. There is no gradual reduction in the formula. The person either is entitled to their entire SSDI benefit when they work or none of it at all. And whether or not they're entitled to a benefit for the month they work depends on their earnings. So in SSDI cases, clients can gross up to $1,180 a month. That's what Social Security calls substantial gainful activity, and that's kind of like the benchmark if somebody's on SSDI. If they make less than $1,180 gross per month, they're eligible for their entire SSDI benefit for that month. If their earnings exceed that $1,180 figure, then they wouldn't be entitled to a benefit for that month. So it's a very simple, straightforward rule. No gradual reductions in benefits, either all or nothing, depending on the earnings. Talked a little bit about the SGA figure in previous webinars, the $1,180 a month. I didn't mention before that if a person is blind, they can actually make a little bit more money and still be entitled to SSDI benefits. Their threshold is $1,970 per month in 2018. So if a person is blind, they are able to make more than the standard SSDI benefit amount and still keep their benefits. And the reason why that is because when, back in the, I guess it might have been the 70s when they first set these benchmarks, the blind community had a better lobby. And so as a general rule, every year, people that are on SSDI as blind are entitled to that higher threshold. One note that I would make about the blind SGA, though, is that the blindness has to be the client's primary diagnosis for them to be eligible for that higher SGA amount. That has to be the primary disability that they're getting the benefits for in order for the client to qualify for that. Sometimes people find themselves in situations where they might be on SSDI for a condition that's not related to blindness. Maybe, let's say, they have diabetes, and their diabetes has progressed to the point now where they're totally blind. In a situation like that, what a client would want to do is provide their updated medical records to Social Security to show that their condition has progressed. They've lost their sight, and Social Security can set their income threshold at a higher amount at that point. You guys as DARS counselors probably aren't going to see the blind SGA that often because obviously a lot of the folks that are blind are BBI, but you may encounter that once in a while. So I just wanted to make you aware that there were two separate figures. The blind SGA is for blind individuals only. A month applies to any other kind of disability. And I'm sorry, my slides are a little bit behind again. All right, there we go. So just a couple news and notes about how Social Security counts income when a person's on SSDI. So, and this should actually say SSDI. The SSI is a typo. But when a person has income, earned and unearned, they need to report that income to Social Security within the first 10 days of the month they receive it. Now, I put the unearned income in there, but what you should really know about SSDI and income is, like, unlike SSI benefits, where Social Security counts the value of unearned income, there is no unearned income limit for somebody on SSDI. They can earn as much in pensions or in VA benefits or anything else that's not wages. There's no limit to that amount of money. So they can report their earned income to Social Security, but it's not going to count against their benefits. The only thing that Social Security is going to look at when they determine whether or not a person is entitled to SSDI for the month is how much they're actually earning in their wages. So earned income is the only thing that counts for SSDI purposes. As with SSI, I said last week that it's important for clients to have a paper trail when they report income. They have to keep track of how they reported and when. And so here again, I recommend, just like on the slide last week, that income can be reported in person. When a client goes into their local Social Security office to provide their pay statements, the representative that takes them is required to provide a receipt as a written record that the information was reported. Also, clients can report by certified mail because Social Security has to sign for the fact that they did receive the wage report, and the client can use that as proof that they reported if it's questioned. Fax, obviously, they'll have a fax log, or a client can use Social Security's brand new feature that allows them to report their income online via their myssa.gov account. And after they report their wages, after they put in all their wage information in for the month and submit it, the client will get a receipt that they can print out as documentation that they did report those wages. And I didn't mention this when I talked about online reporting last week, but in the webinar that I took that talked a little bit about the online reporting feature, they recommended that a client still keep a paper copy of their pay statements. Even if they report online, even if Social Security receives them, the client should keep a hard copy of their pay stubs just in case Social Security ever wants to see them. And it looks like I have a question in the chat box. Emery says, don't you mean that they need to report income within the first days after the month they receive it? Yeah, that was a typo on my part. Sorry about that. Thank you. But that's correct. It's 10 days from the month that they receive it. So if, let's say, for example, any money that's earned in September would have to be reported by October 10th for Social Security to determine if a client's eligible or not for the next month. And again, clients should keep receipts and correspondence sent by SSA. So after a client reports their income, they'll be getting written documentation from Social Security verifying that the income report was received, and they'll say something like, well, on, let's say, September 13th, you reported your income. Based on that, we determine that your check amount is X. And the client can use that documentation that they received from Social Security as proof that they reported if it's ever questioned. So I always tell people to keep all the receipts they got from Social Security in response to the report and correspondence together in one place, so that they can have a written record that they reported if it's ever questioned, because that leads me into the next topic. And again, my slides are slow. I apologize. Let me minimize it. I'll just do it that way. That's a little bit easier. All right, so next thing I wanted to talk to you about is overpayments. And overpayments are simply caused when a client receives more money in benefits than they're actually entitled to. And overpayments can happen for a few different reasons. It can either be caused by a client's failure to report wages. Maybe a client's gone back to work and they don't fully understand their reporting responsibilities, or they just don't do it. That can obviously cause an overpayment. If Social Security is not aware that the client's working, they're going to overpay them. Back when I was doing direct services, I ran into that a lot, where clients would come in and just say, oh, well, I didn't report my wages. I just figured that when I filed my taxes at the end of the year, Social Security would catch up with it. The problem is that a lot of offices are short-staffed, their wage reports are behind, and sometimes they don't catch up to it for years. Eventually Social Security will find out that the client's working, but by then they owe a substantial amount of money because they haven't reported for a long time. I think the largest overpayment case I ever worked on was somebody that owed $100,000. She had been working for probably 10 years before they even caught it. So clients should never assume that they don't report. They should report every month and keep correspondence and receipts as proof that they reported as proof. Now, the reason why I wanted to talk to you about overpayments, though, in the SSDI section is because people on SSDI are often the people that get the most overpayments. And the reason is because of the way that Social Security counts the income. Just a couple minutes ago, I told you about how if a client is earning less than the $1,180 a month, they are entitled to their whole check for the month. Sometimes what will happen is if a client's working, let's say, part-time, maybe earning $850 or $900 a month, they go into Social Security to report that income. The representative will tell them, oh, no, you don't need to report that. You're making under the SJ. You're entitled to your check. And that causes problems down the line, because as earnings increase, as people maybe work more or receive a raise and they're earning more money, they would have to report that income, but people don't always do that because all they remember is, oh, Social Security told me I didn't have to because I was making less than the SGA. So a lot of the time that'll happen. I've had situations where a client will be on SSDI, and that's actually happened to them where they were making less than SGA. They tried to report it. Social Security says you don't need to, and then the earnings went up above the SGA, and they didn't report because all they remembered was Social Security said not to. So, you guys as VR counselors have already maybe run into this in situations where your clients come to you for help with overpayments. And so I wanted you to be aware of some of their appeal rights and some of the options that they have in addressing those overpayments. So in addition to an overpayment being caused maybe by a client's failure to report, sometimes it is just a matter of the client did report and the office just hasn't gotten to updating the record yet. So sometimes the processing delays on Social Security's part could be a reason for some of those overpayments. So it's not always a client issue or failure to report. But if Social Security does process a wage report and they find that a client is overpaid, they have a responsibility to notify the client of the overpayment in writing. The overpayment letter has to specify how much they believe the client owes, what the reason for the overpayment was, and what they can do to appeal the decision if they don't agree with it. And if a client fails to appeal, Social Security will just assume that they agree with the overpayment and start withholding. Now, as a general rule, Social Security can actually withhold a person's entire SSDI check to repay an overpayment. Now, I know that seems pretty drastic and a lot, but that's what the rule says. If a client is on SSI only, then Social Security can only withhold a maximum of 10% of the SSI check. And the reason why it's different is because you might remember a couple weeks ago, if you were with me on the webinar where we talked about some of the differences between SSI and SSDI. SSI is based on need. The clients have to be low income to receive an SSI check. And so because that SSI eligibility is based on financial need, that's why it's limited to 10% of the check. SSDI is not limited to need. And I see that I have a question in the chat box. I'm just going to hold off on it just for a little bit until I can get through the slides, and then I'll get to the questions at the end. So SSDI checks are not based on need. They're just based on disability. And so that's why Social Security can propose to withhold the entire check. And if a client doesn't appeal and the Social Security Administration starts withholding the check, they'll just continue to withhold the benefits every month until the overpayment is paid off. But I wanted to go through with you some of the different types of appeals and what a client's rights are if they disagree with the decision. Again, a client will get a letter from Social Security telling them that they have been overpaid and that Social Security plans to withhold benefits to repay the overpayment. And it doesn't happen right away. The withholding doesn't happen right away. Typically, it happens within 60 days from the date of the overpayment notification. Social Security gives the client time to respond to the overpayment request and appeal if they want to. They don't start withholding the benefits right off the bat. So that's one thing to be aware of. One of the ways the client can appeal, though, is by filing what's called a request for reconsideration. That's a simple one-page form that they can fill out and submit to their local Social Security office, and that's technically an overpayment appeal. And what the reconsideration says is that the client either doesn't agree with the fact that they were overpaid or they don't agree with the overpayment amount. So, for example, reason for filing a reconsideration request is that I don't believe that I was overpaid because I didn't receive the benefits, or you're saying that I owe $10,000 and there's no way that I can owe that much. I didn't receive benefits for as long as you said I did. Those are reasons to file a reconsideration. So it's number one, they don't agree with the overpayment, or number two, they don't agree with the overpayment amount. To file a reconsideration request, there's a specific time frame that a client needs to meet to do that. So as a general rule, the client has 60 days from the date on the overpayment letter to file the reconsideration to request the appeal. All right, so if they want to appeal it, they have to do it within 60 days of the date on the letter that was notifying them of the overpayment. However, a client should appeal within 10 days of the date on the letter. If they file the appeal within the first 10 days after the notification, that will prevent Social Security from withholding any benefits until they make a decision on the appeal. So while the client has 60 days technically to file an appeal, I always tell people that if they disagree with it, they need to file an appeal immediately within 10 days to prevent any withholding of their benefits. All right. The second form of appeal is called a waiver. And this differs in a couple different ways from the reconsideration. Number one, the circumstances for filing the waiver are a little bit different. As with the recon, where it's either the person doesn't agree with the fact that they were overpaid or the amount, the waiver should be filed if the client agrees with the fact that they were overpaid, but they don't feel like they're at fault in causing the overpayment, and they can't afford to pay it back. All right. So there's a two-part criteria for the waiver. One is the client has to show that they're without fault in causing the overpayment, and two, that it would be a financial hardship in order for them to pay back those overpaid benefits. Now, because SSI is needs-based, if a client is on SSI, that automatically satisfies one of the criteria that they can't afford to pay it back. If you look at the actual waiver form, there's a box on there that asks if a client gets SSI. So if a client gets SSI, they file a waiver, and the field office representative looks at the waiver and says, oh, I see that they're on SSI, then they're not going to ask for any more proof that it would be a hardship for the client to pay it back. The fact that a client is on SSI is proof enough for that. If a client is not on SSI, which again is a needs-based benefit, if they're on SSDI only, they're going to have to show that they can't afford to pay it back. So there's also a section on the waiver form that asks the client to list all of their monthly expenses, mortgage, rent, food, utilities, whatever they have, credit card bills. Any living expenses are listed on that form. And then Social Security would ask the client to submit with their statement of how much they have going out, maybe copies of all their bills. And so even if a client is without fault in causing an overpayment, the client, in order to get that overpayment waived, would have to show that if their benefits were withheld, they've got more going out than they have coming in, and there's no way that they could afford to meet their expenses. So they have to show proof of it. So the burden of the proof is on the client. In other words, it's the client's responsibility to show why they're not at fault in causing the overpayment. So an example of that would be Social Security sends a client a letter saying you're overpaid for X amount because we didn't know you were working. The client can file a waiver and say, well, I'm not at fault in causing the overpayment because I did report my income. And that's why I say it's so important for the client to keep records and receipts and any correspondence they get back, because if the client does report there's a processing delay and they're overpaid, they can show that they're not at fault in causing the overpayment because they have a written record of that report and receipts. They can show that they that they did report timely and maybe can be found without fault with the waiver. And the other difference between the waiver and the recon is that there's no time limit for filing a waiver. A waiver can be filed at any time, even if the client has already started to pay the overpayment back. So if they start paying back the overpayment, but they want to appeal later in the form of a waiver, they can do that. And then what will happen is, if the waiver is approved, any benefits that were withheld for an overpayment would be reimbursed to the client. So they would actually get the money back that was withheld from them if they won their appeal. The actual waiver form itself, and I should actually probably send you guys a copy of the waiver form just so you can see it. I'll send that out in an email to those that registered today, but it's about 8 pages. It asks the client to talk a little bit about, why they feel like they're not overpaid. Did you report the income to us? Yes or no. Like I said, it'll give them a spot to list all their expenses, and they'll have to show that their expenses are greater than their income if they're not an SSI, that sort of stuff. And so they would submit that waiver form to their local office with a proof of expenses if required, if they're not an SSI, and any documentation that the client has reported their income that they have. I always tell people, if they're going to file a waiver, never send in original copies of receipts or anything else you have from Social Security. Always make copies of everything that you send in so that they have a record of everything they've given to Social Security. So that's important. The final part of the appeal is a payment arrangement. So this should only be agreed to if the client agrees that they're at fault in causing the overpayment, like in a situation where they say, yes, I agree I'm overpaid because I didn't tell you I was working in a timely manner. So if they agree that the fact that they're overpaid, but they can't afford to have their benefits withheld to pay the overpayment back, they can actually go to Social Security and request a lower payment arrangement. Like I said, if a client is on SSDI, as a general rule, Social Security can withhold the entire check, but if the client can show that it's a financial hardship with proof of expenses, then Social Security can work out a lower payment arrangement where maybe instead of withholding the entire SSDI check, they only withhold a percentage. All right, so a client does have some recourse there if they can't afford to have their entire benefits withheld. If a person is on SSI, like I said, the general rule is the maximum they can withhold is 10% of their SSI benefits. But because SSI is based on need, sometimes Social Security can go as low as $10 a month if the client's income is SSI. They'll even withhold less than 10% if a client can show hardship. And then the last bullet point on here is that people on SSDI must request a lowered payment arrangement if the appeal is denied to avoid having the entire check withheld. So, like I said, if somebody applies for an appeal within the first 10 days of the month, then Social Security won't withhold any benefits until a decision is made on that appeal. But if Social Security comes back and decides that their appeal request is denied and their waiver request is not favorable, then once that appeal is decided, Social Security can withhold benefits again if they're found to still be overpaid. And at that point, it would be the client's responsibility to work out a payment arrangement with their Social Security office on a feasible payment arrangement. But again, I never tell people to work out payment arrangements unless they really do agree that the overpayment was their fault. If it's a situation where a client really feels like they're not at fault, they never should agree to pay back anything. They should always start with appealing either a recon or a waiver. and try and get the overpayment waived if they can prove that it wasn't their fault. So payment arrangement is kind of a last resort if all else fails, really. And the last slide I have for you is has to do with WISA overpayment services. Some of you probably use WISAs already on a regular basis, and I don't know if you're all aware that overpayments are a newer one of the WISA billable services. So if there is a WISA involved, maybe they've done a work world with a client or some other work incentives counseling, and then the client gets an overpayment letter. If the client has a WISA involved, you can actually go to that WISA and give them an authorization to help a client navigate through the appeals process of dealing with an overpayment. So there are a couple of different things that a WISA can help a client with. One is the reconsideration that I was just telling you about. In that situation, the WISA can actually help the client fill out the paperwork for the appeal and submit that to their local office with a copy of any evidence the client has to support their position. They can also help a client file a waiver and submit that to the local office as well. Or if all else fails, they can also help a client do a payment arrangement. Usually payment arrangements are just done, and this is true, I would say, whether or not a WISA was involved. If a client was just doing it on their own, I always recommend making payment arrangements in writing, just writing a letter to Social Security saying, I agree to repay the overpayment. I can't afford to have my benefits withheld, but I propose maybe I'll send you $50 a month. Social Security will have to respond to that request for a lower payment arrangement in writing and either say yes or no, we accept that. So the procedure code in AWARE is A3018. So if you have a client in a situation where they come to you with an overpayment, just be aware, if you don't already know, that a WISA can help them to address that. You can issue the authorization right in AWARE. And funds come out of the work incentives budget, just like all the other work incentive services. They don't come out of the client's case service dollars. And the WISA receives $150 per referral for every overpayment case they work on. So if you have a client that's getting WISA help to address an overpayment, the WISA is going to be required to submit a couple things to you guys as the counselors to receive that $150 payment. So the WISA has to submit documentation that the client's appeal was approved or their payment arrangement was approved to receive payment for those services. Like any other work incentive service, the payment for the overpayment service is based on outcomes. So in order to get that payment, the WISA would have to show that they did help the client get that overpayment waived or a payment arrangement worked out. Usually what will happen is if there's an appeal or reconsideration or a waiver and a decision has been made, Social Security will notify the client of a decision in writing. And if it's favorable, it will say something like, we've decided based on your evidence and your waiver form that you submitted that the overpayment has been waived and that you don't owe us any money, something to that effect. And the WISA would actually have to provide you with a copy of that letter and the invoice in order to receive the payment for the services. All right, so that's just an overview of SSDI overpayments and how those work. And I wanted you to really kind of just get the basics of the ins and outs of overpayments, because really overpayments are a big barrier for people when they're going to work, especially if they haven't worked very much in the past. If a client's working and they're not really sure about their reporting responsibilities, or if they report late and they get that overpayment letter, that's very scary for people, when they get an overpayment letter. And it's always kind of a generic form letter, so no matter how much a person owes, it'll say something like, we've determined that you owe us $50,000 please write out a check and return it in the enclosed envelope within 30 days. So when they get a letter like that, it's very overwhelming. And a lot of the times, clients associate overpayments as consequence of work. And so you guys as the VR counselors have put a lot of hard work into helping clients find employment. DARS is paying for the services they need to be successful in their jobs, maybe a job coach or whatever they're paying for. Everything is great. The client's making money. Then they get this overpayment letter, and it scares them, and their first inclination is to quit the job and to give up the money that they're making because they're afraid of losing their benefits or owing Social Security any more money. And that is very scary. I've seen numerous clients, unfortunately, quit their job because of that. And so that's kind of what we're trying to avoid by making the overpayment of WISA service, is just to make sure that the clients have that help to navigate through the system, know their appeal rights, to get help with the appeal paperwork if they need it. And if they are held liable, maybe work out a feasible payment arrangement to avoid them from just having to quit their jobs. If the client has that help, it's a lot less overwhelming in terms of filing the paperwork and stuff. And so that's why we wanted the WISAs to be available to help people with those. All right. So that was it for the slides. I'm going to go to the chat box now and answer some of your questions. So Anne Marie says, does SSI notify clients of withholdings in advance? Yeah, so I think I covered that after you typed. But yes, so what they would do is, just to reiterate, is if a client is found to be overpaid, typically Social Security will send them a letter saying in 60 days, this is what we plan to do. We'll withhold 10% of your SSI, or we'll plan to withhold all of your SSDI. And so in that time, from the time they get that notification of planned action from Social Security, the client should, if they want to appeal, do it as soon as possible. And as long as they get it within 10 days of the notification of the overpayment, as long as they get that in, then Social Security won't withhold anything until they decide. All right. Is there any other questions, comments, or concerns about SSDI income, the way that Social Security counts it, or overpayments? I think I'm going to leave everybody on mute just to cut down on some of the background noise. So if you have a question, just type it in the chat box, please. I'll just give it a couple minutes. Okay, Carlos says no questions right now. All right, great. Well, if you have any questions about any of the slides today or any of the slides from the previous webinars, I'm here anytime. You can either reach out to me by email or phone. Phone number is 804-245-5593. I would be glad to answer any questions you have about any of this stuff. So next week's webinar is going to be on SSI work incentives. And last week we talked about how Social Security counts income when a client works. For SSI work incentives, they don't always count every dollar that a client earns. There are certain expenses that Social Security allows a client to deduct from their countable income when they work. And so next week, we're going to talk a little bit about some of the work incentives that are out there and how it could reduce a client's countable earnings and maybe increase their benefits. So that's the topic for next week. I thank you all for joining me today. I know that some offices I saw were closing early for hurricane prep. I hope you all stay safe and have a good weekend. And I will talk to you hopefully next week. Hope you can join me. Thank you, everybody. Bye bye.